I love researching new investment ideas, especially in disruptive markets. And I think healthcare is an area where there's a ton of disruption potential. Hims & Hers has been one of the best stocks in the asymmetric portfolio just because it has been disrupting healthcare. They're going outside of the insurance industry. They're offering new products, personalized products, just a ton of innovation going on at that company. And that's why the stock has skyrocketed over the past year. So when I recently saw rumblings that investors are starting to think that Teladoc is going to be turning around soon too, I thought it was worth taking a fresh look at that company. I've never invested in Teladoc, but I get the story that telemedicine is likely the future of medicine, or a big piece of the future of medicine. But what I learned about Teladoc and Hims & Hers, I think is really interesting and really telling about why Hims & Hers is one of the biggest positions in the asymmetric portfolio and why Teladoc is not going to be. If you want to know more about that portfolio, find out what I'm buying every single month, including what I'm buying at the beginning of July next week, subscribe to Asymmetric Investing. There's a link on the screen and a link in the show notes. I think you'll really like what you get there. The portfolio is absolutely crushing the market. So love to have you as part of that community. And I also want to thank Fiscal.ai for sponsoring this video. I'm going to be using Fiscal.ai throughout this video. It's actually what I used to do a lot of the research, not only for Hims & Hers when I started that position in the spring of 2024, but also for Teladoc over the past couple of days as I've looked at them. This is the best research tool that's out there. It's got everything you need, what insiders are doing, transcripts, financials, and these key performance indicators. I'm going to use these throughout this video because I think those KPIs are really what tells the story about both Hims & Hers and Teladoc. So check out fiscal.ai/ASYM. If you want to try it out for free, you can get 15% off after that. I think you're going to love that product. But let's start here with what I think was compelling about Teladoc when I first looked at it. So I like companies that are growing, but I also want to pay a reasonable price for them. So you look at Teladoc, not profitable. The price to earnings multiple is negative. I don't like that necessarily, but I'm not worried about a company not being profitable if they are growing. 10-year growth rate, really phenomenal. This short-term 3-year growth rate, that's a little bit of a red flag, but I'll get to that in just a second. Here's what I did like. Enterprise value to sales, just 0.7. If this does become a high growth company, there's a lot of upside if you're only paying an enterprise value to sales of 0.7, and price to free cash flow is under 5. So they are free cash flow positive when you take out things like stock-based compensation or non-cash expenses. That's a positive. I like a company that doesn't have to go back to the market to raise capital if they need to use it, if they need capital for something for growing the business. So I look at these valuation numbers, also a very, very small market cap, just $1.4 billion, and I'm intrigued. So to go a step further, I'm going to go to their financials. I'm going to look at, these are in the key performance indicators. This is the integrated care revenue. That's the light blue column. And then dark blue is BetterHelp. BetterHelp, something you probably hear if you're listening to podcasts. They advertise that all the time. I thought it was interesting that BetterHelp is actually in decline. I would have thought that this would have been a growth business. So just note that. But you see that the revenue for integrated care is actually on the rise, not growing super quickly, but it is going up. The other thing that I thought was interesting is the number of members is going up really rapidly. 102.5 million members just in the US. So a ton of potential to not only grow in the US, but even internationally, if they're going to grow internationally. So again, you can see why I'm intrigued by Teladoc stock. But one number kind of ruins things for me. And that's this one right here. The average monthly revenue per US integrated care member. A lot of words there, but basically, how much revenue is Teladoc generating per user, per member on the platform? Remember, over 100 million members. That seems like a ton of members. A quarter, a third of all eligible users in the US. That seems like a really, really big number. Maybe I have access to Teladoc, but I've never used it. So a lot of members, but not a lot of awareness. And then what backs that up is that revenue per user is going down, and the revenue per user is anemic, $1.37. And this is the trailing 12-month numbers. Let's look at the quarterly numbers. Look at this trend, declining from $1.46. This is December 2021 quarter, down steadily, and then drops like a rock. So those numbers, those member numbers rising rapidly is probably because Teladoc is offering their service for dirt cheap prices for companies that are buying insurance products for their employees. Those employees are not making the choice to be Teladoc members or Teladoc users, and they're clearly not getting much value from it because the fee is only a little over $1 per month. If 50%, 80% of people were using Teladoc, that fee would have to be much higher to be able to cover the costs that are associated with the program. So it likely means that there's very, very low usage of Teladoc, and the buyers who are choosing to buy Teladoc are actually big companies. It's not individual users. Let's contrast that with Hims & Hers. You can see Hims & Hers is a little bit more expensive. Enterprise value to sales is 52, but look at this growth rate. 3-year growth rate, 77.2%. In the most recent quarter, that was actually over 100%. It is profitable, but a very high price to earnings multiple. A little bit bigger company, almost a $10 billion market cap after the recent drop in shares. Well, let's look at some of those financial metrics, and particularly some of the key performance indicators. I'm going to start with the number of subscribers. Now, the subscriber number is significantly smaller, 2.4 million subscribers in the most recent quarter. Let's look at these in quarterly numbers. You can see that it just grows steadily quarter after quarter after quarter. But remember, this is individuals choosing to use Hims and Hers. So how much are they spending on the Hims and Hers platform? You can see that this spend is actually going up. Now, $84 for an average monthly online revenue per user. So Hims and Hers is growing subscribers faster and it's generating significantly more revenue per subscriber. But here's the big takeaway, and this is the reason that Hims and Hers is going to remain one of my biggest positions until the story or the data changes behind that company, and why Teladoc is not a stock that I'm going to add to the Asymmetric portfolio. The best way to find great businesses in a digital world, in an online environment, is look for who customers are choosing to interact with. You can see that there are over 2 million people and growing choosing to interact with Hims and Hers. Yes, Teladoc has over 100 million members, but those members, even members who have access to Teladoc, are not choosing to interact with Teladoc. That tells me everything that I need to know about these two companies. High engagement users with Hims and Hers, very, very low engagement, low value users with Teladoc. That's going to keep me out of Teladoc no matter what the value is. You can take that same framework into lots of different businesses. Look at Netflix. They have the most hours watched per user. Do you want to invest in Netflix or Peacock? Those hours watched is going to tell you everything you need to know about the direction of those businesses. Spotify, same thing. High engagement, high value. Apple Music, not so much. These are trends that happen over and over and over again. So if you find the company that customers are choosing to interact with, the app that's being downloaded the most, the app that people are choosing to spend their money on, that's where the opportunity lies. That's why I'm going to stick with Hims and Hers and not buy Teladoc. So hopefully that was helpful in analyzing those two companies. Let me know if you have different thoughts about Teladoc in particular, or if you think I've missed something with that company as I do research. I really thought that I was going to like the stock more, but looking at those revenue per user numbers and the engagement that they have on the platform, just not very impressive. But let me know if you think differently. Like I said, don't forget to subscribe to Asymmetric Investing here on YouTube, and then check out my newsletter. For premium members, I've got 4 emails a week at least coming out. And like I said, those buys for July are going to be coming out next week. So I'd love to have you as part of that community. Thanks for watching, everybody. We'll see you here next time.